Okay, so down payment assistance. If these two things are scaring you and making you not explore all of your home buying options this year, we'll talk about the down payment that you always hear that you will need to get a mortgage, and then we'll talk about the interest rate. So let's start with the down payment. So down payment, there are definitely ways that you can have help with that. You can have a family member that if they want to gift you something, they can be able to help with a down payment. And we can go more into that of how that would look for them being able to assist you. But this is essentially a gifted fund to you. This is gift funds given to you to be able to use as your down payment. You can have this already saved into your savings as well, that is built already in from you just having an account that you've been putting a little bit back and been saving over time. And then you can also have down payment assistance. So with that, your mortgage score needs to be at least a 620. That is the starting requirement to get down payment assistance. A few other factors play into part as far as like your debt to income and other things. However, you do need a 620 on your credit score. So if you are not sure what your FICO mortgage scores are, because that's different than what you see on any credit monitoring apps or like Credit Karma, those are going to be your FICO 8 and 9, and those are going to be your Advantage. They're going to be your Advantage scores. But you're going to need to make sure that you're getting your FICO score, which is going to be your 2, 4, and 5. And those are your mortgage scores. So if you need assistance on that end, we can be able to get on a call and talk about that as well. So there's a lot of different factors and things that help you prepare and get ready to start your home buying process and to get pre-approved with a lender. But that is just going to be one way that you know that you can have your down payment assistance covered. And it doesn't have to come directly from you. You don't have to continue to save. There are options for you to be able to get in with a no down payment. There is 2%, 3%, 4%, and 5% on the options for down payment assistance, which means if you needed 3.5%, which is the standard or the common down payment, then you can definitely use like a 2 if you didn't want all 3.5, or you could do 3 if you already have a little bit saved. You could choose to do 4 if you wanted to cover all that 3.5 and have a little bit left over for you to be able to have as well. Or you could do all of 5 if you just want, just some extra money that helps with the down payment assistance and then can float over to your closing costs, because you're going to have different costs and fees. They're all going to work together at the end, but they're going to be separate on what they do and when you need to take care of them. And that'll be a buyer consultation call. That's great to kind of go over that and break all that down with and for you. So that covers the down payment assistance. You can definitely have that covered for you. You do not have to come out of pocket that. The next thing is going to be interest rate. So interest rate, we hear that often of, just waiting for the interest rates to go down. They're kind of high right now. And there's a lot of different things that we could talk about. And that would definitely help you with your personal situation for you to be able to understand it more. However, they are where they are, and it's not seen that they're going to be coming down anytime soon. So while you're waiting for the interest rates to come down, you're also waiting to build equity. And while you're waiting to build equity and you're doing leasing or renting, you are also just giving away money to someone else that is building their portfolio, their generational wealth, their finances, their financial freedom. Is building all that for you, and it's not doing anything to you, anything for you. The only thing that you're getting out of it is somewhat of stability, of having somewhere to live. That's it. So let's explore all your options to see what is going to be a good fit for you to be able to start doing something and building something for your own. So interest rates, ways to be able to control that and have that a little bit lower. So you can have the option where you have a seller buy down. The seller could buy down 3, 2, or 1 points, or what they call 3, 2, 1. We're still going to be paying down a certain amount in the first year, the second year, and the third year for you. That's going to be from the seller, so that's not you having to come out of pocket with anything, but that can help lower your interest rates. Once you get pre-approved, the lender can definitely show you estimates and how that works with worksheets. I always recommend my clients, buyers, to be able, and sellers, for you to be able to see how that sheet looks for you every single time. Let's run this scenario and see how that looks, and let's run this scenario and see how that looks. So you definitely have all your options laid out in front of you, and you know what your best option is going to be after you get to compare all of them. The next way is that you can come out of pocket if you have savings, and if you want to pay that down, that would be added to your closing costs under the category of buying your interest rate down. If you're not wanting to come out of pocket any on that option, then you can definitely have that added as seller concessions. And what that is a gift or from the seller that's going to be applied to you, and you can use that for whatever you need it for. So if you need it for just true closing costs to be able to give you the extension of the loan, then that's fine. And all the things and the steps, items that are inside of that, that's perfectly fine. If you want to use some of the concessions to buy down your rate, and you have a little bit saved, or you have other ways to be able to not have to come to closing with a lot down, or someone in your family has gifted you money to be able to assist with your closing costs, then you can do that as well. So there's a lot of different ways for you to be able to come back. We've had several clients that have gone to closing and have received a check back, which means that they had to put very little money down or out of a pocket to be able to get started, and they were able to get a check back to be able to cash with keys to their home. So this is very doable. The most important thing is to be able to talk about your situation, see where you are, see what's going to be best for you, and then having a personalized plan, a strategy plan that's going to be for you, so you know exactly what you're looking at. So that's exactly what we do during this call. I do have it linked here. It is in the comments, so you'll be able to see it. You can click on it. You can schedule a time. If you happen to not be able to see it for some reason, just click on our group page, message me, send me a message. If you have my phone number, you know how to contact me there, and I'll add our phone number as well, so you can be able to see it. But there's a lot of different ways for you to be able to explore all of your home buying options without feeling like you got to come out of pocket or in the beginning with so much, which a lot of people just don't have saved, and that's fine. But it still doesn't put you out of being able to be a homeowner. So let's explore all of your home buying options together. Go ahead and schedule a link there.